Bitcoin, again, is on the forefront of massive attention. We've seen it pooled in a lot of different ETFs. And as people continue to buy this currency or this cryptocurrency, how is it really going to affect your portfolio? Now, a lot of the major players when it comes to hedge funds, when it comes to financial institutions, are talking that you should have a certain percentage of your portfolio invested into cryptocurrency. If you look at Catherine Wood, she is saying roughly 18 to 19%, which I think is kind of crazy. But for a majority of people, 1-2% could be feasible, even up to 5%. But how do you get invested into Bitcoin and what is it really? So today's video, we're going to be looking at the 5 steps for building your Bitcoin investment strategy. And overall, because Bitcoin is the largest, Bitcoin is the most popular cryptocurrency that we see, we even have nations that are trading and transacting in Bitcoin, which makes me think that it isn't going anywhere. As much as people say that it's made up fake money, we're going to have to see. So starting with step number 1 is to educate yourself. This is really the nuts and bolts of Bitcoin, of the blockchain, knowing exactly what it is and what you're investing in. I always say one of the first rules of investing is you have to know what you're investing in. If you don't want to take the time and effort to go ahead and understand it, that is fine. Don't invest in it. I really wholeheartedly believe that when it comes to the blockchain, when it comes to technology, the decentralization in distributed ledger system, which of course enables security and transparency for digital transactions, kind of a very general overview utilizing computers. Now, we tried to, unfortunately, explain this to a couple individuals. They weren't really getting it, got some reading materials once they understood exactly what it is. And of course, it's kind of crazy because Bitcoin, and a lot of people don't realize this, has a limited supply. So it is not an infinite supply of Bitcoin, just like we see with our greenbacks, with our paper currency, where if they want more money, the Federal Reserve just literally runs the printing presses 24/7 to create more currency, which of course we have seen worldwide as the devaluation of currency has happened. But that is not the case for Bitcoin. And that is why the verification transactions, the mining, are really the logic and the reason why Bitcoin, in my opinion, is going to be around for an incredible amount of time. And also, we're going to have to see what goes on with regulatory developments, what technology advancements, when essentially Bitcoin is all mined, exactly how that's going to happen and what that is going to look like. Looking at number 2, define your investment goals and your risk tolerance. This, of course, you have to go in with a very clear strategy. And we're going to talk about a couple of investment methods in just a minute. But are you looking for long-term wealth accumulation if Bitcoin continues to rise? Are you looking for diversification where you're just not in stocks, ETFs, things of that nature? Or are you looking to really buy and sell this as a day trader? Short-term gains maybe over a day or two. You buy the dip, you sell it when it's up. You buy the dip, you sell it when it's up. Really understanding not only what you're buying, how you're buying it, the methodology behind it, but also knowing what your risk tolerance is. And I always say with something as volatile as Bitcoin, do not invest more than probably 1 to 2% of your net worth. Like I said, if you really know it, maybe 5%, but you have to know where your risk tolerance is. And also, do not invest anything that you're not willing to lose. You never know what could happen with it. And I know stock market could be the exact same thing, but putting a little bit into a cryptocurrency might be highly advisable. And honestly, I do have some as well. Now, I don't invest like through a Coinbase or through, a crypto.com or through a Robinhood, nothing like that. I actually own the Bitcoin myself, which of course is through Ledger. Again, you can do some research on that, but I want to own the Bitcoin itself. I don't want my Bitcoin sitting on an exchange. Because step number 3 is choosing the right investment method. This is the one that I choose, which is a buy and hold strategy. This strategy is the purchasing of Bitcoin and holding it for the long term. This, of course, could be regardless of Bitcoin goes up, Bitcoin goes down. It's at 18K, it's at 100K. Holders believe the intrinsic value of holding the coins is really the future growth for Bitcoin. And a majority of Bitcoin holders are exactly that. Most of them that do hold Bitcoin hold it for an extended amount of time. A lot of it is in cold storage, like I said, on a wallet where it's not in an exchange and people don't have access to it like fraudsters. Now, second method for this is trading. Now, of course, this is the buying and selling, really looking at the short-term gains or losses as the price movement. Now, this, of course, you have to have a very deep understanding of market trends, of candlesticks, of technical analysis, Again, this takes a lot of research to monitor the market closely and understand when the ups and downs are going to happen. Then, of course, the third method is the crypto funds. This is the entire handoff approach, which of course involves the ETFs. This has the fund managers. This is leaving it all to the thoughts and the minds of professionals to make the investment decisions on behalf of the investor, which essentially would be you, which again, this is going to make a big play into what your risk tolerance is within cryptocurrency. Now, step 4 is implementing your risk management strategy. Now, this is probably one of the biggest, most crucial parts when it comes to Bitcoin. Diversifying your portfolio across a bunch of different asset classes will spread out your risk and also reduce the impact of something doing poorly. This is the reason why I fall back in not buying individual stocks. When you look at something like the S&P 500, which is the VOO, when you're indexed across all of the different sectors of the market, if let's say the tech sector takes a big nosedive, chances are you have a lot more stability in some other sectors, which is going to make up the big difference instead of just being completely invested into one thing. Now, you could also do the exact same thing with your cryptocurrency, essentially portfolio or your strategy. If you're buying, let's say, some Bitcoin, some Ethereum, some Solana, a couple of different coins that are the large market cap coins, you could go in there and kind of diversify it, that you're not holding, that 1, 2, even 5% in Bitcoin and Bitcoin alone. You again could kind of strategize this. And also the ETFs for Ethereum are going to be coming soon in the future. I believe there's a little bit of a delay as of right now on what the SEC is going to do when it comes to Ethereum, having the ETFs very similar to your Bitcoin ETFs. Now, of course, regular assessing your portfolio, because the crypto market is so volatile, it is not where I'll put it in, the Vanguard S&P 500, set it and forget it, just keep pumping money into that, seeing the growth factor. The crypto market is a different animal, and you have to really understand that. With very short-term market fluctuations, you have to decide what kind of investor you are up front, and making sure that you have not only a going in strategy, but also a cash out strategy, or a place where you don't want to take that much of a loss. For instance, right now, I believe cryptocurrency is around $65,000. So if you're investing money in there, regardless of the amount, let's say your strategy is, hey, if this drops to 50K, I'm out. Or you could even play it on the other side, where if it's at 65K, if this goes to 80K, 90K, whatever it may be, at that point, I'm going to sell the asset. I am out. Again, really knowing your risk tolerance and knowing the strategy that you're going to. And the final step of this is staying informed and adept to what is going on. Cryptocurrency is a very dynamic landscape, as we've seen over the last 10 years. Technological advancements, regulations from governments, market trends, countries trying to ban it, countries using it as currency. Kind of crazy to make sure that, again, looking at portfolios, but looking at the education of Bitcoin itself and seeing what is going on with the news that is related to Bitcoin, and adjusting your portfolio as you need. Now, again, this is going to be very dependent on the strategies that you're choosing, because if it is a buy and hold strategy, you're probably talking 3, 5, 7 years. But if you're ready to go ahead and buy Bitcoin, there are a ton of different platforms. When you look at Coinbase, Gemini, Kraken, you can buy it in Robinhood, you can buy it in M1, which I have some links down below. You can pick it up in a bunch of different places. Now, of course, exchanges are just the intermediaries, but a lot of people do connect and keep the money within those exchanges, which again, I don't recommend. I recommend you keeping it in your own wallet that you have, that is yourself. Now, even here in the United States, we have Bitcoin ATMs, which are popping up all over. So you can actually create an account and you can buy Bitcoin directly through these Bitcoin ATMs, which of course charge you a service fee, but overall getting into the Bitcoin market can be kind of crazy. So guys, let me know in the comments what you guys think about Bitcoin, really getting in there, and I'll catch you in the next video.